Good morning. Today is Sunday morning, and I thought that it is very relevant to talk about a very interesting topic about the secrets of investments. Normally, this is from a personal point of view with the slide which I'm going to show you. What are the different types of investments? You have, see, when we were doing CA, we had studied something known as matrix allocation. I believe everybody knows about that. What is matrix allocation? Matrix allocation means it is not putting all the eggs in one basket. It is putting eggs in different baskets so that your risk is minimized in any eventuality. So what are the types of investments we are talking about? In an individual level, you have term deposits, you have stocks, you have the gold, you have the mutual funds, you have the provident funds, you have the bonds and debentures, you have the various government schemes. Recently, I spoke about all these topics in length for the Vittiya Gyan, sponsored by our alma mater Institute of Chartered Accountants of India. The YouTube link is already there in Bangalore chapter of ICAI. You can go through it. I have elaborately explained about all these things. Today, we are going to talk about how to identify a stock, a good stock, how to identify a good stock. Normally, I am a very social person. I go to the seminars, I do attend seminars, I go to the meetings or attend social functions. Social functions, it can be marriage or thread wearing ceremony or Graha Pravesham. Wherever I go, people just come and surround me, and they bombard me with so many questions about how to invest and where to invest. So I was just thinking about this. Instead of telling each and every person, let me make a small, brief note and let me reach to a wider audience so that everyone can benefit from this. See, basically, what exactly happens is you have to see the company. The company, how is the company? Okay, once you see the company, then you have to see the management. Management means how the day-to-day running is going on, how the company is effectively managing the things. I don't want to take the names, but you rest assured some of the companies in the Bombay Stock Exchange, the top 50 or 100 companies we are talking, which have a weightage in the index, they, according to me, are managed very well. So that is this thing which I want to give you one example. So if you see L&T, if you see Reliance, if you see Airtel, there are n number of companies. Really, they are doing very well over a period of time. It is not that they are fly-by-night operators. They are here in India for good. So all these companies, the company, the number two, the management, their products or services. Products can be anything, day-to-day use products. Maybe if you take fast-moving consumer goods, it can be soaps, whatever it is. So, or if you take services, means the banks. There are so many good number of private sector banks which are doing really. I mean, they're giving you very good what is that service to the public. Now let me add one thing. I had one investment in Sundaram Mutual Fund for the services. It was called Services Fund, and it has doubled, more than doubled within a very short period of time. That speaks the volume about the valuation of those service sector companies. Then visibility in the market and the market share. Visibility, how it is visible in the market. For example, if I want to take the example of Hindustan Unilever Limited, if I want to take the example of Marico Industries, if I want to take the example of Godrej Consumer Products, if I want to take the example of Tata Beverages, you go to the market, they're visible, and not only visible, even when sometimes I go to rural places also as a part of my job, they are visible. They are visible in the market. One example, beautiful example, which I want to give you is the availability of all the products in there is a place, a holy place for Hindus, that is Kedarnath. Kedarnath, from Gaurikund to Kedarnath, it is almost 14 kilometers. And in the en route, complete en route, there are small kiosks or shops or whatever it is. And you will find all the products of the company which I mentioned. So this is called visibility. It is not important that they are visible only in the cities. It has to be noted that they have to be present in every part of the country. That is the meaning of visibility in the market. And the market share. What is the market share of that particular company for that products? Okay, that is also important. Then profitability. Profitability minimum it has to be 8 to 10%. That I go with that. I'm a little bit old school of thought, and I have this thing that minimum it has to be 8 to 10%. There are some new age companies which recently, like Paytm, or so many companies got listed, recently, Zomato, Paytm, Zomato, and all this. I don't basically understand how they can have a positive value when they're constantly incurring losses. New age investments, maybe going forward, maybe they may turn into profit because of the translation of the possible customers into profit, because all these things go on the assumption that in future the numbers will increase, and based on the increase in the numbers there will be profitability. That's what I understand. So maybe experts can elaborate on that. Now then, sixth point, cash position and bank position. This is very important. I am speaking from my own practical point of view. Cash position is definitely required, as well as the bank position. There is no point in having a huge number of term loans, or you're facing problems with the banks with the repayment schedule. There is no charm in that. I know, because ultimately you have to pay for it, or else you will be referred to insolvency, or whatever is the case, in case if you are not able to repay on time. Then you have the number seventh point, account receivable. Account receivable position means it's very important. Account receivable means whenever sales is made, there is no point in just adding it to the sales. Sales will show a very good figure, but the sales has to be realized into cash. That is the most important. 90 days, it could be 90 days. Normally in India it is 60, but in Middle East where I was there, it used to be 90 days. So the accounts receivable position, it has to be managed really well. And if it is not coming on time, there has to be a provision, because there is no point in showing inflated sales as well as inflated accounts receivable position. Then, very important, promoters quota in equity. This is the most important. The higher the quota, the value of the company will be higher. The higher the quota of the promoter in his company, that shows that he has got interest in running the company. If he is going on diluting his stake, means he is lacking that interest, or he is not interested in that company to move forward. So just based on the promoter's quota in the equity, the higher the quota, the value of the company will be higher. One small example, MRF. One small example, Sri Cement. Next, quality of corporate governance. That is very much important. How is the quality of the corporate governance? How they run the company? How is their total control of the company? How they react to whistleblowers? All this is very important. That is quality of the corporate governance. Then overall growth in the segment of the industry in the near future. The industry, it can be FMCG industry, it can be anything, automobile industry, it can be steel, metal industries. The position of that particular industry, and you have to see where this particular company stands in the overall growth of the segment of that industry in the near future. That is from 1 year to 3 years, 5 years, I don't know. Nobody knows what will happen in 5 years. Between 1 to 3 years, yes, you can have a guess. Then after that, finally, you should have the overall cash flow position. What is the overall cash flow position? Overall cash flow position means how well is the company having its cash flow position. That is how the money is coming in and how the money is going out. Everything has to be very clear, and it should not have any ambiguity. So once you have all these 11 steps, then investing in a share market or whatever it is not a nuclear science, and you should be having a pragmatic, positive thinking approach. This is the main crux of it. I will be sharing this PowerPoint presentation also so that you can have a look after my speech is over, small speech is over. Then these are the different type of investment strategies. One is passive and active strategies. Number two is growth investing. You're focusing more on the growth. Then you have the value investing. Value investing means especially the IT companies, they're all value investing companies only. Then you have income investing. Then you have indexing. Then you have dividend growth investing. And finally, you have the contrarian investing. Contrarian investing. So this, if you are able to carefully analyze the following above mentioned steps, chances of hitting the bullseye, that means making money in the market like Mr. Jhunjhunwala, Rakesh Jhunjhunwala, is 90%, and you can be your own portfolio manager. Thank you for listening to my small speech. Thank you.